Turn our attention to the markets now and see exactly how things are faring. Positivity for the most part out in Asia, perhaps expecting to see some sort of changes coming through with that electoral situation out in the United States. But it does seem to be getting a whole lot more difficult then, having seen Donald Trump earlier in the day take on Florida, take on Texas, which of course were red states even before this situation prevailed. He did, however, that's Joe Biden, take on Arizona, which bode well for him, which is a former red state. That is the big swing that he's seen thus far. Wisconsin as well seems to be headed in the direction of Joe Biden, but some vote counting is still to come. So we'll certainly see how things fare on that side. As I said, positivity out in Asia, some positivity as well out in the European market picture for now, as we see a big 0.42% gain on the CAC 40. That's 20 points higher at this point in time. On the local front, we're also seeing a similar picture, nearly 1% to the good for the JSE All Share, sitting at 53,691 points. So good picture there, more than 503 points gained, in fact, in this lunchtime trading picture. The financials have also ticked higher, around 0.25%. That's despite banking counters going down a third over there, which of course are in that financials counter there. The big gainers, though, are the industrial firms, sitting there with 2.69% of a gain over there. That's nearly 2,000 points higher at this time, sitting at 75,409 points. In terms of losers, however, as you can tell with the gold mining and platinum mining shares going down, it does mean that resources overall have taken a bit of a hit, around 1% lost over there, with as we said, the listed property sector also going a little bit higher today, but not too much to write home about on that front. Let's go into the stocks then. As you can see, just at the bottom right hand screen, should I say, bottom right hand side of your screen there, Sasol has managed to tick higher today, sitting well above that 100 Rand a share mark, sitting at 104.90. In fact, it's 4.5% stronger. BAT, that's British American Tobacco, also managing to get into some of the black territory there, 4.4% to the good, 542 Rand a share. So some positivity there as that market continues to churn some good numbers as well. Murray and Roberts taking a good gain today, but of course construction firms have languished in some negative territory for the longest time. 7 Rand and 82 cents is where that share sits. Those are the big gainers. Naspers is up 3.7% at present, sitting there, as you can tell there, at 3,177 Rand a share and 38 cents. There's still the big counter there. And that, of course, is the leader for the industrials, and why the industrials have gone up 2.6% is primarily because of Naspers, which has gone up 3.7% higher there. On to the negativity then. Liberty, 2 degrees, the property stock suffering as well, taking a bit of a hit with Royal Bafokeng Platinum also sitting in red. That follows through from the negativity of the platinum miners then as well. So as you can see, a whole host of negative numbers coming through here. Even Absa Bank sitting down, what is that, nearly 3% in this lunchtime trading picture. Very quickly, let's finish things off then and take a look at how things are faring on the commodity share board. Well, it seems that Brent crude is enjoying some positivity today, 2.4% to the good on that front. The demand questions have continuously been at play, but the US elections are also quite predominant feature in where exactly the numbers will head today. Nearly $1 gained, in fact, in this trade today so far. Negativity, however, for gold and platinum, as it seems that a lot more plow goes back into the US market a little bit later on today. We'll see how that fares, as we have seen some positivity. Even the US market yesterday has been positive as well. So hopefully, also sense that might even continue. On the local front, when it comes to the currency, well, weakness is prevailing at present. It doesn't seem that the emerging market space is taking too kindly to the US election news. We'll get into this picture a little bit more, but 16 Rand 16 is the price of a US dollar. A euro will cost you 18 Rand and 91 cents. It's pretty much 21 Rand on the dot then for a British pound. This market picture has certainly been one of keen interest to a whole host of people. Then what exactly happens out in the United States is going to be very interesting for this entire market picture. How the markets develop from here on in is going to be a question of whether they presume that things are going to look well for the Democrats or Republicans, and whether those policies will offer some sense of stability. One can imagine that with Donald Trump continuing perhaps to be in the presidential seat after this election, if that happens to be the case, perhaps it offers some sense of consistency, no matter what consistency looks like at this time. Let's have a chat, though, to Makwe Masilela from Makwe Fund Managers as we unpack this market picture. Makwe, thank you so much for the time. the US elections are getting absolutely interesting. We still don't know the final result here, but it's not looking too great for the Democrats. Does that paint a particular picture in the market?
It does, and good afternoon to you and to the viewers. It does, in fact, because what we are seeing now in the markets, you can call it the unwinding of the bid and trade. Because remember, the first 2 days, markets were excited because we were hoping that the Democrats will definitely win, and convincingly so. And as we know, that win could have meant something, especially when it comes to the likes of the stimulus package that will have tell you that we'll expect a larger than expected stimulus package of anything around 2 trillion. And also, people see him, Biden, as well positioned to be able to negotiate with China. The tensions might not be that high as well. And as they continue the stimulus package, that will boost their consumer spending, and we know the likes of the US, 60% of the economy is driven by consumer demand. But now when you start to have a situation where you see a neck-on-neck kind of a thing, as others are stating that you might have a Democrat a president but with a Republican Senate, or you can have a Republican president with the House, a Democrat House of Representatives, that tells you now that there are going to be issues when guys have to come into passing the necessary laws to take the country forward, and more especially how they will respond when it comes to COVID-19, because the Democrats have been seen that they'll respond better than Donald Trump when it comes to the impact of COVID-19. But now if we have a situation where Donald wins and the guy still controls the House of Representatives, then even when it comes to the passing of the new stimulus is going to continue. So that at some stage, especially in the earlier sessions, gave most markets a bit of jittery. Hence, we saw the markets being skimmish. And I think, Arabil, all we are seeing here is what we call efficient markets, because as the news flows, as the news changes, the markets react accordingly. And I guess one just have to buckle up for continued drama going forward.
Yeah, if we, of course, do get a sense then that Donald Trump does maintain his presidency seat, and if we talk about the other elements here, the House of Republicans, as well as the Senate, what are the chances then that any changes there would move things along? I mean, for now, we're sitting with the House results with the Democrat Party at 188 votes, while the Republican Party at 181. Of course, you need 218 for a majority there. When it comes to the Senate, it seems that the Republican Party is also closer there, 47 votes compared to 45 from the Democrat Party. You need 51 to get a majority on that front. What change, or rather, does it give a sense of stability if Donald Trump sort of stays in power, to a sense that we know what to expect now and can kind of plan for the future? Is that the sense from the market?
Not necessarily. Markets are immoral and also apolitical. Remember what happened in 2016. Equities had a sell-off. Then after some few hours, they regained. Yes, Donald Trump, we know that is the guy who's in favor of reduced taxes, especially when it comes to corporate tax. Then definitely that will boost the earnings of companies going forward. But the truth be told, Donald Trump, whether he continues with reducing taxes, stuff like that, then markets will find a way to work around that. But the big issue here is markets will be too worried if maybe this whole thing gets to be contested, because now you've got some form of uncertainty. And yes, Biden, whether he wins, will get a knee-jerk reaction, either way. But markets are mindful of the fact that Biden himself, as we said, bigger stimulus probably that will help the economy. Yes, we know that it's got the impact of increasing their budget deficit, as we're talking now, which is sitting at almost 3 trillion. So markets will find a way to come to a point to accept whoever gets to be a winner. Hence, we're saying, to a large extent, markets tends to be apolitical. So it's neither here or there. But now what has been driving this whole thing, and even when you look at the yields themselves, the yields have been going down, the bond prices have been going up. That itself tells you that people see safe haven into buying bonds. But up until all this noise is over, then markets will find a way to settle.
Yeah, I mean, it's going to be very difficult to tell when all the noise will be over, though, right? So do you expect volatility for some time to come? And, will it be fully dependent on the election, or is it just going to go to a case of policies now?
I think we know their policies as they've been campaigning. As we said, Biden probably will look into increasing taxes, the opposite of what Trump is doing. Stimulus, we expect more from the Democrats as opposed to what we see from the Republicans. When it comes to trade issues, especially with China, we expect Biden to be more call it diplomatic compared to Donald Trump, but markets have got to live with the way Donald Trump is been handling China. So we know their policies. So it's a question of let the noise be over, then definitely we'll live with all that, because the guys have been campaigning. We know what they want to bring to the fore. Yes, there was a time last 2-3 months or so, markets were excited wanting to have Donald Trump coming in again because they were happy with the tax issues. But hey, they'll also get to understand those policies and find a way to adjust, because the biggest thing here other than taxes is the issue of who's going to be able to help the U.S. economy to recover, because at the end of the day, you can have lower taxes as much as you want, but if companies are not making money, if companies are not growing, then even if the taxes are low, we only pay tax when we make profit. So the underlying thing is we need policies that will drive the economy, and that's in the stimulus as one of those policies to help the U.S. economy to start to recover. And as you can even see with most of the commodities, they're all down at the back of a stronger dollar, and that's the opposite of what we've been seeing on Monday and Tuesday when it comes to currency. So most sensitive currencies, unfortunately, are down because of a stronger dollar.
Yeah. Makwe, appreciate the time. Thank you so much for that. It all will unravel a little bit later on as well. Then the picture out of the United States elections and what that means for the local market, in fact, global markets as a whole, is something we're going to take a look at here as well. And we'll give you a sense of what exactly is to come. We're going to take a short ad break, though.